JDR Cables is a manufacturer of subsea cables and umbilicals for use in oil and gas markets and the offshore wind market. For JDR, the export market is absolutely paramount. 95% of our output is in export markets, particularly Asia, Australasia, South China Sea, Middle East, and also obviously we supply the North Sea and to some extent West Africa. We first heard of the export finance scheme when we had a project for the South China Sea for the Chinese National Oil Company, which was actually the largest project we've ever done, which is a £20 million plus project. And so for that expenditure on our kind of turnover, at the time we had the project, was a big jump. We were talking to our bankers and they could see our revolving facility being stretched. They could see our performance bonds requirements moving forward, and they suggested to us that we may engage the export finance scheme and consider that as part of the finance for this particular project.
The UK export finance schemes that we have been involved in have been particularly helpful for us. We would not have been able to grow our business to quite the same level without that extra facility and guarantee facility. It's a very easy and helpful process which gives you the extra capital to really grow your business. Because of these schemes, JDR is now significantly larger and able to take on significantly larger projects.
Working capital is very, very important. This is a project-based business. The working capital requirements vary dramatically quarter to quarter. If we have a £20 million job going through, that's great, good revenues for that quarter. The next quarter we might have £2 or £3 million projects going through. So the working capital moves up and down dramatically, and we need support in that part of the market, particularly when we get these large projects. The working capital scheme had great significance. Without the support from UK Export Finance, we probably could have lost the job because we had to do it in a certain time scale. There's a very, very tight time scale, so very important for JDR. The working capital scheme has made a vast difference to JDR. We're now in a position where, as a result of doing the large projects, we now have the profit from those projects. They've come into the bank, which has reduced our revolving facility. So the interest in our revolving facility is reduced. So overall, it's been a win-win situation for all involved. Export of industrial products for the UK economy is vital. We need to get more exports, create more jobs, get the balance of trade deficit down, and this is one way to do it. Short term, obviously you have to pay for it, but in the long term, it really pays dividends. I think some companies are aware of the export finance scheme. I think the problem is they've got this idea that it's expensive and well, you know, we can't afford the expenditure, etc. The answer is you can't not afford to do that if you've got big projects. You've really got to look at it and see the bigger picture, and the bigger picture is you can take the bigger projects along with your existing projects, you can expand your business, and the amount of finance it costs you to do that, frankly, in a big project is negligible.